We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld.
And coming up, tech stocks power ahead as President Trump's massive AI push eclipses his tariff threats to China and Europe.
Artificial intelligence, top of mind this hour in Davos. We'll hear from BlackRock's Larry Fink and Salesforce CEO Mark Benioff.
And on the earnings front, J&J tops estimates as strong cancer drug sales offset the decline of an older blockbuster. We'll discuss with the CFO Joe Wolk in just a moment, but let's take a quick check on these markets right now. You can see that rally extending when it comes to the S&P 500, nearing 6,100 on the big benchmark there, knocking on the door of a new record high. A lot of that enthusiasm is being led by the tech sector, by Netflix, by Oracle in particular, and you can see the NASDAQ 100, tech heavy, up about 1.4%. The bond market, very quiet today. We'll see how long that lasts, but 10-year Treasury yields at this moment unchanged. Now let's turn our focus to earnings. Let's take a look specifically at Johnson & Johnson. The company reported fourth quarter earnings that beat expectations this morning, but the stock is falling and then some. There's a lot of speculation about why shares are down almost 4% right now. That is the biggest decline intraday since 2023. So let's bring in now CFO Joe Wolk and some of the reasons that have been named, Joe, for why we're seeing this decline in the shares is maybe it's the MedTech unit falling a little bit short of expectations. Maybe it's the sell side not being too good when it comes to Forex changes.
Yeah, good morning, Katie. It's a pleasure to be with you and the team here at Bloomberg. You know, it is a little frustrating for me as the CFO to see the stock decline when we come out with yet another quarter of beating expectations on the top and bottom line. But I think you have hit on it with respect to 2025 expectations. Only about, actually less than half of the analysts updated their models for the strong appreciation of the U.S. dollar versus other worldwide currencies. That has about a $1.7 billion impact on our reported top-line results and about a 25-cent impact on our EPS. On top line, I do think that miss is having some influence in the market right now. On bottom line, we still met, even though they had that error in their models going forward. So it's really strong operational performance. And if you think about Johnson & Johnson, the breadth and depth of 26 products and platforms that generate more than $1 billion in revenue annually, it's enabling us to overcome multi-billion dollars of revenue hits this year related to Stelara erosion due to biosimilar competition here in the U.S., some Part D redesign, additional discounts and rebates going to some products, as well as a slower pace of growth in China for our MedTech business. We're able to deliver 3% growth on the top line, almost 9% on the bottom line on an operational basis. Most companies would probably be contracting on both top and bottom line in that series of events. But I am very confident we've leaned in to the expectations for 2025, but we're very confident we can achieve it, and it'll really set us up for differentiated growth going forward in 26 and the balance of the decade.
Well, Joe, it's really interesting. I mean, we've been having this earnings conversation for a while now, and you think about your earnings over the past year have been pretty strong. Then you take a look at the share price down more than 12% over that time. What do you think the market is missing or underestimating when it comes to products, geographies, currently marketed drugs? What's missing here?
There are some assets in the pipeline that I think the street has undervalued. If you look at our offerings in lung cancer, Rybrevant is off to a very strong start. We're hopeful and planning for a subcutaneous formulation, which will be better administratively for patients as well as better tolerability. That has blockbuster potential. I think bladder cancer has the same. We're pleased to add the intercellular therapies business to our business in the coming months, assuming regulatory approval. And I think there's a couple things that when we speak with investors are on their mind. So we haven't lost investors within our top 100, but they haven't added positions. And they think about the Stelara erosion. They want to make sure it's on track. And from what I understand from all of them, it's not likely that investors jump in before the loss of exclusivity on a major product. The second one is the talc litigation. We are scheduled to go in front of the Southern District of Texas Bankruptcy Court on February 18th. As you know, Katie, we have more than secured at the time of the vote closing to present this plan more than the required 75% required by bankruptcy code. And I can tell you in the months since that support has only grown numerically. So we think we're in very good position. So certainly don't want to get ahead of ourselves. And then there's healthcare overall. I think it's been a little bit down since the election, but there's very positive talk, I think, with respect to the new administration and President Trump himself commenting on the PBM middlemen, getting transparency of where these discounts and rebates are going. As we all know, more than 50 cents of every drug spend dollar is not going to the manufacturer or the innovator who actually put capital at risk for better health care.
I wonder about the currency issues. We've heard that, the stronger dollar could be a headwind. We always hear that when we see this kind of move. But how much of a problem is that? It's only up like 2 or 3% over the last year. It is up, I think, 17% from the end of 2020. How much do you think about that in your role as Chief Financial Officer?
Yeah, that's a good question, Matt. We certainly don't look to offset it. It's something much, it's beyond our control, and this kind of goes in waves. So sometimes we get a benefit from it. Sometimes we have a little bit of a hurt, as we do for the 2025 guidance. So we try to manage the business responsibly on an operational basis, making sure that our market growth on the top line is above that of our competitive set, and then making sure at Johnson & Johnson that we grow commensurate or even a little bit better than the sales growth for earnings. And that's how we more or less think about it. We're not going to kind of chase a strengthening dollar, which may be a temporary moment in time, and forego what are really promising R&D programs that will benefit not only patients but our business.
Curious a little more, if you could double down on what you think will be the biggest change for Johnson & Johnson in this administration. You pointed to the price negotiations, the pharmacy benefit managers, and the approach the Trump administration would take to them. But what about other measures? Do you see, for example, M&A taking off in a way in this administration such that it could be a lever you use to catapult growth?
Yeah, that's a great question. I think if I think about the new administration, I think there's a lot of reason for optimism. They're pro-growth, they're pro-innovation, they're pro-business, and that's a very stark contrast to what we have experienced in recent years. And so we'll have to see what some of the legislation comes out. Obviously, M&A, I've heard the same type of rhetoric out there. It hasn't really stopped Johnson & Johnson. We did 2 acquisitions. Well, one was announced and one we did complete last May in Shockwave. And so it hasn't really stopped us, and it's finding those strategic businesses that create value for shareholders. There does seem to be more of an opportunity, though, given that the change in administration for additional M&A. At Johnson & Johnson, while those big deals make the headlines, we did really much more consistent with our playbook, 40 smaller deals that are great for value creation. They might be a little bit riskier, but when they pay off very big.
Yeah, of course. You think about that deal that was announced just a week or 2 ago at the start of the J.P. Morgan Healthcare Conference, Intra-Cellular. You're buying that for about $14.6 billion. It sounds like what you're saying is that maybe we should be on the lookout for more M&A coming from J&J.
Again, I would say those deals, those larger size deals, that tends to be somewhat unique and somewhat of an outlier. We tend to focus on those smaller deals. It really comes down to a strategic fit. So we don't go into any given year or any given quarter saying we've got to get a certain number of deals done. Are we in a position to utilize our scientific expertise, our commercial capabilities of creating access for patients to create more value in our hands than where the asset currently resides? And if we can do that, that will tend to have us be very interested in making acquisitions. We've been very successful recently with Abiomed and Shockwave. They are both hitting their deal model, actually above the deal model, and the integration has been seamless. So we want to make sure when we do one, we do it particularly well.
You know, yesterday we heard Larry Ellison talk about some remarkably hopeful developments or forecasting remarkably hopeful developments in cancer research on AI. Have you used AI at Johnson & Johnson? Have you got any drugs in the pipeline that you've been able to develop with the help of AI?
Yeah, it's a great question, Matt. We're using AI, we're using machine learning. I would say it hasn't paid off with that home run bet of identifying new drug targets, but we can now take real-world evidence through blinded medical records, imaging, and come up with solutions and get to clinical trials completion quicker. In medtech, we're re-imaging the heart in a 3D formulation that leads to less manual contouring during during ablation procedures. And then at the corporate level, we have better accuracy with forecasting as well as just chatbots for employee services.
Joe, very sorry. We have to leave it there. We're coming against a hard break. We thank you so very much for your time this morning on the heels of a print that did beat estimations, but of course, facing some of those headwinds in the dollar like many companies right now are feeling. We're going to turn now to the World Economic Forum in Davos with an exclusive interview with Ukraine's President, Volodymyr Zelensky. Stick with us. This is Bloomberg.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital.
Yes.
They will not have relaxed time. Yes, it's very important because I heard that some allies said that yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want them
No.
line.
Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin? And do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us.
Not without
It's important.
That was the president of Ukraine, Volodymyr Zelensky, speaking with Bloomberg's editor-in-chief, John Micklethwait, in Davos. Later on today, John is going to speak with Argentina's president, Javier Milei. That's at 11 a.m. New York time. You can catch it on Bloomberg Television, on Bloomberg Radio, and on Bloomberg.com. Happening live right now at the Bloomberg House in Davos, a conversation with the CEO of Anthropic. You can follow that conversation on your Bloomberg terminal. Just type LIVE Go, Live Go, to hear from the CEO of Anthropic in Davos. This
so there's a spectrum of risks here that we should analyze rationally and understand the trade-offs.
Let's focus on the upside. We talked about some of the geopolitical risks. You mentioned life extension and
This week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage all week, only on Bloomberg. Context changes everything.
Let's get to high interest now. Look at what's making headlines around the world. Migrant communities in cities across the country are bracing for the mass deportations pledged by President Trump. The president has issued new orders, including giving immigration agents the power to enter churches and schools, which apparently they couldn't do before. Trump has also reinstated the Remain in Mexico policy instead of just saying you're free to roam. And he's trying to restrict birthright citizenship with an executive order. The president also pardoned a number of people, 1,500 in the January 6th attack on the Capitol, as well as Ross Ulbricht, who was serving a life sentence in prison for the founding of the Silk Road Marketplace. Ulbricht was jailed back in 2015 for running the dark web marketplace where illegal drugs, hacker tools, and hitmen were sold using virtual or cryptocurrencies. In its 2 years in operation, more than $200 million worth of illicit activity flowed through the site. That doesn't seem like very much now, but it did then, this according to the Department of Justice. Federal employees in diversity, equity, and inclusion roles are being placed on paid leave today as offices related to those will be shut down following President Trump's executive orders. Agencies will be given a week to submit a written plan for removing those employees from the federal workforce. In a separate order, the administration moved to limit diversity preferences in federal contracting. Katie?
All right, well, happening right now at the World Economic Forum in Davos, Bloomberg's head of economics and government, Stephanie Flanders, is moderating a panel with the IMF's Jita Gopinath and others entitled Navigating the Fiscal Squeeze. You can follow along on Live Go on your Bloomberg terminal. But let's take a look right now at what's going on in this market where volume is about 25% above the 20-day trading average. You can see the S&P 500 currently higher by about 0.7%. All of the action is in the NASDAQ 100, up 1.5%. Your biggest gainers on a points contribution basis. You have, of course, Netflix up there. You have Oracle up there. But NVIDIA is your biggest contribution right now. You think about this AI venture that was announced. Of course, you have SoftBank and OpenAI are the lead partners in this venture. But ARM Holdings, Microsoft, and NVIDIA will provide technology along with Oracle and OpenAI. So all roads seem to lead back to NVIDIA. And you're seeing that in shares up about 4% today.
This is going to set the S&P to a fresh record high today. We are already on a record high basis from a closing high, and we are just points away from an intraday high. The AI euphoria bringing it back, but also those earnings under the surface were pretty good.
Yes. I mean, it's a little early to call a closing high, right?
A lot can happen
hours away.
As we know, a lot can happen between when Romaine gets on set. You know, things
Everything
change.
changes.
But you're not here tomorrow, so what fun would we have if we didn't call it today?
That's a good point. Maybe what the market needs is for me to take a break.
Yeah, well, you're going to be off for a week and a half, so we have a nice, healthy break for the market coming up for Matt Miller. But Elise, at this exact moment, at 10:19:25 a.m., we are on set for that record right now. And again, it's big tech that's leading the way.
I think if you look at the sectors today, it's pretty fascinating. The S&P 500, you actually have more sectors in the red than in the green, despite that volume you've been talking about. It is information technology, communication services, all higher. Staples and discretionary for consumers also higher on the day. I think it's interesting to see real estate as the worst performer on the day. We are seeing the 10-year behave under 4.6% generally, but between the small caps and real estate, it's telling you, isn't it, that these are levels that might still be a little too high in terms of what could really fuel some of that broadening.
Also, looking at that chart right now, I mean, good breadth, that broadening out, it's a nice to have. It's not a need need to have. What you need to have is big tech to see this up market that we're currently enjoying right now. And you're certainly getting that today again with tech up about 2%, Matt Miller. At
I'm
least on the
scrolling
sector
back
level.
through the chat to find, because Terrell had posted the actual
You're not
intraday
participating in the
high.
conversation?
I'm looking, I think it was 6,099 and change. We didn't quite make it to 6,100. But yeah, the broadening out is impressive. You see, I think now 63% of S&P 500 members are above their 200-day moving average.
Can I also point out some breaking news on the terminal, because we've been talking so much about how investors have been navigating this market. This is a down arrow story in a hedge fund universe that's been doing quite well. Breaking news, Baupost clients, this is Seth Klarman's Baupost, famous investor. They have pulled $7 billion since 2021 after poor returns. This was one of the best performing hedge funds, guys.
When?
It only gained about 4% a year since 2014.
That was one of the best performing?
Really?
When was it one of the best performing?
Yeah, well, remember, it's been a while. Last year was a year where we saw Citadel, Millennium, D-Shaw up double digits, and also either returning money or asking clients if they want to take money back. And Citadel had so much interest that the clients didn't even want their money back.
Well,
so it's a big divergence to see this at
It seems like
Seth
this
Klarman's
story
fund.
in particular is a story about bad performance. Average annual return, let's just say that again, of 4% since 2014. It lost money in 3 of those years. We have a saying in the ETF world that flows follow performance. And I mean, you can apply that to basically any asset class, any wrapper, that if your returns are not good, then the money won't be that good.
Well, maybe they could do what you're seeing a lot of people do in your industry, hedge fund managers filing for ETFs.
Well, that's a tough business because, again, you have to have the performance.
Right. And so maybe that's not going to be what brings the flows back. Back to the markets, guys. It's interesting because...
They've been a good performer.
Who?
The S&P 500.
Absolutely, and maybe the NASDAQ 100.
How many hedge funds outperform the S&P 500? Just buying VU.
Shockingly few, it seems like.
Yeah, I mean,
what's the pitch? That you have diversified returns?
The
that
fascination
you're not correlated to the big benchmarks?
At these highs, the fascination here is that, yes, they want to buy more stocks, bonds, commodities, and pay 2 and 20 for these big money managers to do it in order to beat the market. Now, we're going to go back to the Bloomberg House at the World Economic Forum in Davos. Somebody who knows a little bit about money management, BlackRock CEO Larry Fink, sitting down with the CEO of G20 and Bloomberg's Francine Lacroix for a conversation about AI.
It felt like last year, 2 years ago, it was about talent, it was about the right chips, it was about the right technology, and now it's all about infrastructure. So you announced with Microsoft basically a $30 billion fund.
And that was just equity.
Right.
We'll raise another $100 billion in debt.
You're 100 of debt. Talk to me, Larry, about the rationale for this. I mean, infrastructure, if you don't have the right infrastructure, you can't be like a huge player in AI.
Well, hi, everyone. Look, we have great partners with G42 and MGX, but let me just talk about the concept. First of all, it is still about people.
Yep.
We don't have enough electricians in the world to fit the need in building out this infrastructure. 2, it is about national security. It has enormous geopolitical issues all around it. And we can talk about what the Biden administration announced last week related to the approvals that will be needed to have advanced technologies in different countries. So it has many geopolitical issues. But as fantastic our hyperscalers are, and the U.S. right now has the greatest technology platform in the world. We have 5 or 6 major companies that are in the cutting edge of technology. But as big as they are, as large as they are, some of them over $3 trillion of market cap, some of them have $70 billion of free cash flow. They don't have enough money to build this all out. And, you know, I write about the whole evolution of the capital markets. And I believe this is going to be probably the first in our lifetimes where the capital markets, in terms of very strategic growth, is going to play a very large role. Mm-hmm. And I actually believe how the Trump administration is rolling out now, talking about making private sector capital more easy to invest by rolling off restrictions and regulation and permitting. And so the confluence of the capital markets, all the technology, all the innovation, and then you have to overlay all of that on sourcing power.
Right.
Because all of this is going to require this intersection of power, capital, and technology, all with the idea that it's going to be ultimately a big leveling for the world, elevating more people in the world, providing more access to information and technology. In the short run, it is going to be about bringing all those three segments together, and it's going to require an enormous amount of financing, and we are very excited about it. I know BlackRock could not do it alone, as large as we are. I don't believe MGX and G42, I'll let Peng talk about that, could do it alone. Also, Microsoft and NVIDIA could not do it alone, so it's a combination of bringing it all together. And we were excited to read in the papers about what Masa and Sam and Larry Ellison's doing on a similar project.
Yeah, Peng, can you talk to us about size and scope? Like, actually, I mean, when we talk about AI infrastructure, how big will it be? Where will it be? How much money will need to be deployed on this?
Sure, but first let me start by saying this: great partnership here. Global leading investor, and we are a very active builder of AI infrastructure. So globally today, we have about 60 gigawatt of data center capacity globally. In our conservative joint assessment, the world needs more than 200 gigawatt, potentially over 300 gigawatt. Of Conservatively, yes, both for training and inferencing purposes. Remember, to build a full-blown 1 gigawatt GB300 class data center, we're talking about $40 to $50 billion. 1 gigawatt.
That's one AI data center.
We call this AI factory. By the way, Larry didn't touch on one thing that's also equally important to power and chips. It's connectivity. Connecting the world with all of this. That's another massive investment required. So, as Larry said, no single company or even single government can do this by themselves. And this is why we're joining hands between different investors, builders, coming together under the umbrella of this global AI fund, and to build this infrastructure on a global scale. So one example I'll give to you is in Abu Dhabi alone. Now, UAE is a nation of only 10 million people. But we look at our region, Middle East, we did our assessment. In UAE, to serve the region, we'll need a minimum 5 gigawatt of AI data center. And guess what? We're building that as we speak. So if UAE needs 5, just imagine other major centers around the world. So this is a massive undertaking. We have to do this in partnership.
And as I would say, as we sit here in Europe with very high energy costs, there is another idea of having the data centers occupy somewhere within the GCC with the sovereignty of an embassy.
Digital embassy.
Yeah.
Yes.
So it'll be a digital embassy. And so that could be a solution for parts of the world that have high cost energy or countries that have to import energy. So this is, as I'm saying, this represents a lot of geopolitical issues too, and some very large cooperation, which would be a good thing between governments.
So, Larry, let me ask you, are politicians aware of, are they taking this seriously, or is it really up to private companies to come up with the funds, deploy it, and get it done?
I don't think there's a conversation we're not having with any government that is part of the conversation is about what role can their country play within AI. Some of them have power and energy, and some of them don't. Some of them need water, some of them do. So it really depends on each and every country, but it is a conversation we're having in Asia, throughout Asia, throughout Europe, and North America. So.
How does the Trump administration, second time around, change all of this? It feels like, they're putting crypto, they're putting AI really at the forefront of their administration.
I hope so. I mean,
I think under Trump, the majority of the training workload for frontier models will remain on U.S. soil.
Absolutely.
And it should. It's very cutting edge, advanced capabilities U.S. should protect. But having a great model but not deploying it is no good. That's why we need partners from Abu Dhabi to Hong Kong to deploy inferencing infrastructure to serve those models to the global population. So this is why the partnership is so beautifully constructed. And Larry is very focused on investing primarily in the US today to help the hyperscalers to build their next tier of frontier model. And we're much more focused on the global deployment of inferencing fleet of GPUs and infrastructure.
But Peng, from a builder-operator point of view, how much energy you need for this? Are there new partners that you have to bring in?
Absolutely. We need a lot of energy partners to be able to make this a viable global undertaking.
And hopefully this raises a conversation about what role will nuclear play in the energy mix. I mean, I don't believe we have the available energy if it's going to be 300 gigawatts worldwide. Keep in mind, we have to service, it's very important. If you're going to be building a data center, the data center has to be good for the locality.
Yeah.
It can't be drawing power away from the average consumer. So therefore, it can't raise the prices of electricity or it's not going to work. And so in every case, you have to be working with the locality and the government, working together. In many cases, it's going to require, let's assume, just round it up, I need a gigawatt of power. We are going to have to source that power. We're not going to be tapping from the grid.
And if we do, Larry, if as investors and builders we do take power off the grid, we have then commit to build additional capacity for the locality.
So that's why this triumvirate of power, data, and capital is all integrated.
It's like a triangle, but there's been a lot of talk about using renewable energy. Is now that out of the window because of the Trump administration?
I mean, by no means. I think every hyperscaler has long-term aspirations to be utilizing more and more renewables. But in the short run, let's be clear, it's going to be heavily powered by gas.
Natural gas
in the United States. It will be supplemented by renewables.
Yeah.
And as I said, hopefully it raises a whole conversation about the role of nuclear in the future. And it should be a conversation we're having today. Because we're going to need unless fusion actually works and we have new sources of power, we are going to if you think about a Monopoly game, the worst part of the Monopoly game is owning a utility, right? You never wanted to own a utility.
You own a bank.
No, you never. But these utilities now, these power companies, are really important now.
Absolutely.
And these utilities stocks were dragging and dragging and dragging for many years, and now they're all rallying considerably. They have to play a vital role in this conversation.
How important energy is, I'll give you one example. In the UAE, what we talk about, this formula of E equals MC squared, we actually change the formula to E equals to I. Energy equals to intelligence. The more you can have that, the more compute you can deploy, the more intelligence you can generate.
I don't think in a Monopoly game you still want to own a utility, but
I mean, this could change in 2025.
Owner, you might want to own that.
We should have the BlackRock Monopoly edition.
Right.
Like no one's ever thought of that.
One more thing I would say is that our friend Elon loves to say this, nuclear fusion, we have it already right now, which is solar.
Yeah.
Solar energy is a form of derivative
of
nuclear fusion from the sun. We need to harvest that. We need to do a lot more of that.
In what time scale? Because this feels like such a massive project, and it's still quite theoretic, I think, in a lot of people's minds.
We had a meeting on this with a bunch of power companies at lunch today. And it depends on your time frame. If your time frame is 2 years, you have one answer. If your time frame is 5 years, you have another answer. If your time frame is 20 years, you have all different answers. And so it is about the immediacy, and that's some of the issue. Everybody is saying I don't think a country wants to be left behind right now. I don't think a hyperscaler wants to be left behind, or a technology firm wants to be left behind. So there's going to be a huge amount of capital deployed. Right. Now the question is, how do we ensure that the capital is deployed, that we get the proper return across the board, that we're focusing all the different issues. But in every conversation you have with anybody from the technology side, they're saying the speed in which these AI models are improving is accelerating, and that means the utilization is improving dramatically.
Absolutely.
I would just say one thing. When I look at different companies in different industries, and I always highlight, like, I always highlight Walmart, who's had an exceptional 18 months. And you talk to the leadership of Walmart, they believe so much of their performance has been driven by their utilization of AI right now. They have better information of their clients than most of their competitors. They have better inventory control using AI and intelligence, and it shows up in their financial results. And every company, I believe, is going to start utilizing that in a form. And so I think this is all going to be accelerating over the next 10 years.
But Peng, who do you think decides this timeline? So is it politicians? Is it the AI companies?
I think the market will decide that. I think the demand.
Not Elon Musk.
Well, he's both the demand and the supply. And but on the demand side, seriously, I do believe we'll see significant uptick at these models. You heard from Dario earlier how smart these models are getting. And they are not just one, there are multiple frontier models very capable of PhD-level intelligence already. If you allow me to just slightly adjust topic a little bit, you mentioned crypto earlier. I think it's impossible to have a great conversation with Larry. We were talking about crypto. What you did with your ETF is incredible, truly incredible. And I actually believe crypto is a currency of AI. We spoke about earlier how soon enough all of us will have multiple agents, AI agents working for us. They're going to inform us, they're going to support us, they're going to make transactions on our behalf. So worldwide, there will be explosion of financial transactions 24/7. The traditional banks, the SWIFT system cannot support that. So crypto will play a bigger and bigger role in the age of AI.
But at the same time, we're going to digitize currencies very rapidly. And we've seen that in India and the great success of leveling in India because of that. And you're seeing the great success in Brazil. So there are two countries that are more advanced in these technology, in blockchain, than Europe and the United States right now, and that's India and Brazil. They had a need because of inflation, because of corruption. They need to digitize their currency, and I do believe this is going to accelerate, and that's going to be the next frontier, using AI, using this. But crypto is going to play a big role. The digitization of currency, digitization of everything we're doing. I'm a big believer, and this is one thing that will change Bloomberg even. I believe we're going to be in the cutting edge of tokenizing bonds and stocks.
It's coming.
And we have the technology now. The fact that we are now moving forward in tokenization every bond and stock is crazy. Yeah. We should be moving towards that frontier. Obviously, there's winners and losers and all that, but we need to be prepared for the tokenization. And it would democratize more finance if we tokenized bonds and stocks.
By the way, that drives more compute need as well.
Yeah, my bosses already expect me to be at least 20% more productive with AI. So it's going to be a fun
only 20%.
Run. Only maybe 25, especially in Davos. Talk to me a little bit about what you're expecting the Trump administration to do for crypto specifically. I mean, these
I think it's already very well articulated. They've fully embraced crypto as a new, not just financial system, reform technology, but a new economic driver. I believe they have a thesis that to extend the dominance of US dollars, they'll be launching very powerful stablecoins to promote broader adoption and usage of US dollars. I think this will be a fundamental strategy for the Trump administration.
So I mean, I look at it from the BlackRock has been built on the entirety of hope. I mean, most of the money that we manage is retirement savings. So you ask yourself, why on earth would anybody invest for a 30-year outcome, or 40-year outcome of retirement, unless they're hopeful that in 30 or 40 years, the world's better? And so the whole foundation of what we have done is a foundation of hope. And we try to promote that concept of hope and get more people to get their money out of a bank account and invest for the long term, right? Okay, and that's what we try to do. As I became a student of crypto, it was very clear to me that crypto is a currency of fear. And that's okay.
To some extent.
Yeah, but that's okay. Yeah. Because if you're frightened of your debate, basement of your your currency or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those local fears. And so I'm a big believer in the utilization of that as an instrument. And so if that becomes true, and you see that it is it could be a proper hedge against maybe hope security or equities.
Yeah.
The question is, could you see a 2 or 5% allocation? I was with a sovereign wealth fund during this week, and that was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, but it would be 500,000, 600,000, 700,000 per Bitcoin.
But Larry, does it also?
I'm not promoting that, by the way. So that is not my promotion. Or
Larry, if you allow me, Bitcoin is just one use case of blockchain.
Yes.
Right. Blockchain is a general purpose technology. It's just like AI. So with blockchain, you can have paperless contracts. You have seamless transactions.
Well, that's what you would do in the stocks and bonds.
Exactly, tokenization. And one more thing I'll mention, if you allow me, Larry, is again the convergence of blockchain and AI. Now, with AI, you can expect within this year, we're going to see deep fake so real. You cannot tell the difference. People watching this on live stream, they will not know what's in here.
We're not here.
We're having dinner somewhere else. So to counter that, you need some form of digital watermark. Mm-hmm. That is actually a cryptographic evidence
that you're
this
real.
Is real.
Yeah.
It's my signature, his signature.
Who puts that? The tech companies? By the way, they're so excited at the back. They're trading crypto on the back of Larry's comments.
It's all your fault. No, we control our private key. It's going to be public
It'll
key.
be personal.
We'll have control.
It's going to be like your irises, your fingerprints. It'll be a digital.
But it's stored on blockchain.
Yeah.
Witnessed by the global population.
Everybody knows.
Cannot be faked.
Yeah. But does this change everything for just capital markets?
It will. Yeah. I mean, my gosh, if we could tokenize bonds and stocks tomorrow. One of the great things that BlackRock is being accused of is how much vote we have. I wouldn't vote anymore because we would be able, through tokenization, to know the owner of record instantaneous, and each owner of record will do their proxy voting. I would love that outcome. No, but it would democratize investing in all ways that we can't imagine.
Even political systems, how you vote in a country, can change by that.
And do you think that, again, the Trump administration will accelerate that?
I think they're moving that direction. How far they actually will go remains to be seen.
But if you do have a digital validator, like your fingerprints or your irises, I mean, you could tokenize voting. You could do everything. And so it will change how we think and how we live and what we do. And
we've been talking to some Southeast Asian governments, including Malaysia, Thailand, Philippines, Indonesia. All of them historically have the populations who are treating black market, bitcoins, and what have you. But now the governments are realizing U.S. is driving a global policy shift. So they're now doing something very clever. They're saying, you know what, we're going to issue a new form of digital ID to every single citizen. Along with that is a digital wallet.
Which Brazil and India has already done.
You're both so fired up about this, and you're so excited about it. I'm going to ask you what you worry about in the next 12 months. Is it that something goes wrong with the inflation, or is this that some of this gets into the wrong hands?
Well, let's say cyber risk is ever present, and the amount of money that we're going to all have to make sure we're protecting, and we give a surety, and we give strength around the value of your digital identity. So all of that that's the foundation of any order. And so let's be clear: the amount of time and effort and money to authenticating everything is real. And so if there is something that breaks down that authentication, then we have a timeout. The biggest risk we have worldwide today is the world believes we are past the high point in inflation. And I could see real realities of elevated inflation. I know that is not the market forces are saying at the moment, but I could truly see a scenario where we are going to have elevated inflation. We would have a higher 10-year Treasury, and obviously the bond market. That's why I love the capital market. We're going to find that out. The bond market is the ultimate tester every moment in the market of what's happening globally, and so we'll see. But there is not a low probability. I mean, not below 50%, but there is a probability that we could see elevated inflation again, which would be creating an elevated 10-year Treasury, which changes a lot of the conversations.
And this is what, because of an overheating U.S. economy?
That's a possibility. Or, I mean, look, I'm here in Europe, and I've never seen such pessimism. So I'm going to leave. I was the one who's normally pessimistic about it, and I'm actually relatively optimistic now because it's so bad. That's what That's. So I would, always go against Davos, and you'll make a lot of money. So, the pessimism is so tangible about Europe.
Yeah.
It almost feels like it's a nice counter trade.
A good entry point. Peng, what about U.S. restrictions on semiconductor technology? Do you expect that to change? This has been an issue, frankly.
Yeah, I think the Biden administration left a very difficult executive order on the desk of Trump, where really we discussed this already, speaking very frankly here, was a gift for another country, to China. That is, if you do not supply the necessary baseline technology to your allied nations, to your friends, guess who didn't call? They're going to call somebody else, because people cannot live without AI, without infrastructure. So I think there has to be a balance, what to restrict and what to share, and ultimately work with folks like us to build this global coalition.
And that's the geopolitical issues that I referenced in my opening. It's larger than that's in the ether at the moment.
Peng, are there active conversations that you know of either trying to restrict or... And you're optimistic about that?
I'm very optimistic that the next 4 years will bring a lot of positive changes.
Okay. Well, thank you both for joining us for a good conversation around the world.
Thank you so much.
And that was BlackRock CEO Larry Fink and the CEO of G20 speaking with Bloomberg's Francine Lacqua in Davos. And it was a wide-ranging conversation, you guys, on AI and crypto. We got there too, but
it honestly felt like a couple of crypto bros did a J and talked about, wow, how amazing tokenization is going to be 10 years ago.
Let's take a drink every time that blockchain was mentioned. I think we're at least at 20, but some interesting comments towards the end from Larry Fink, of course, talking about the biggest risk that he sees in the world right now is people thinking we're past the high point of inflation. He also said that everyone on top of that mountain feeling a little bit pessimistic right now, Europeans seeing a lot of doom and gloom, and that maybe he would take the other side of that.
Can I talk about some numbers that I actually thought were kind of interesting in the scope of the conversation? They were talking about the need for 200 to 300 gigawatts of investment needed here to power these AI factories. That's $40 to $50 billion for 1 gigawatt of investment. Times that by 300, you get 10 to 15 trillion dollars you're going to need to start powering these AI factories. And so you could see why that AI trade is taking off. This idea of partnerships, guys, I do think is interesting in this era. One thing a source had told me a long time ago, a couple months ago, was that you're going to need to start to tap the Middle East more and more for some of that energy source you need for, now again, this AI need in the United States. So this whole idea of deglobalization doesn't really stand in the Trump era if you think about that investment needed.
Yeah, that seems like a lot of money. I think someone needs to redo those calculations, because that is too much, right? Even Moody's says it's going to be only $2 trillion over the next 5 years, and Bloomberg estimates it's going to be $1 trillion.
We did get some news while that panel was underway. This coming out of Stellantis, which I thought was really interesting. We were talking yesterday about the potential tariffs on Canada, what that would mean for the auto industry in the U.S., given how linked the North American auto industry is. Stellantis Investments returns 1,500 jobs to their Illinois plant. They're going to produce their new mid-sized pickup in Illinois, and they're going to build their next-gen Dodge Durango at their Detroit complex.
Yeah, I'd be interested to know what the next-gen Dodge Durango looks like. Is that electrified? Is it a hybrid? Hopefully the latter
we know that
for
the Trump administration
investors in Stellantis.
On EVs.
No, and consumers really not that hot on EVs either.
Very true.
It's interesting to see Olaf Scholz in Germany wants to really push ahead, obviously because they've invested, Volkswagen, Daimler, and BMW so much in electrification. But yeah, this is interesting. You know, they're also pulling their production down from Canada into the U.S., Illinois, Ohio, and Michigan. Let's get back to the Bloomberg House at the World Economic Forum in Davos, where Bloomberg's Brad Stone is sitting down with the CEO of Salesforce, Mark Benioff.
Which is, of course, President Trump. You have been understandably supportive and optimistic of the new administration, but I wonder how you kind of rate the week one executive orders, the tariffs on Mexico, Canada, and China, shutting federal DEI efforts, pardoning the January 6th protesters, ending EV subsidies. How are you evaluating things so far?
Well, I think that, you know, we can really evaluate that the current administration and what's going to happen by what we saw with Trump 1, which is that a lot of the things at the beginning are not exactly where we're going to be in 6 months or a year. So, you know, I'm very positive. I'm just looking forward to seeing what's going to happen. And, you know, it's a new day. And it's an exciting moment. I mean, I can't somehow get off my phone. It seems like there's another news story. I don't know how you're feeling, but I feel like every minute there's some new thing that I don't even know about. Like, well, you just told me like 20 things I don't even know.
And that is the Trumpian.
Hey, what do you think about this? I don't know. Jesus, like,
well,
get my phone back to me.
We'll keep doing that. I don't know if it was yesterday or today. Davos kind of messes with your perception of time, but Trump appeared with Sam Altman, Masayoshi Son, and your mentor Larry Ellison to announce Project Stargate. Tremendous branding there. And the number bandied about, I guess, was $500 billion. It's unclear whether that's real or not, to build new data centers and sources of energy to support the next generation of AI and U.S. competitiveness. How are you reading the practicalities of that alliance and the project?
Well, I think the big news is that, you know, OpenAI is moving off of Microsoft. So you can see the real, you know...
Are you being facetious?
No, you can see that this is a break with Microsoft. So Microsoft's not involved. This is the first time that OpenAI is moving into a non-Microsoft data center. This is really the result, I think, of Microsoft hiring Mustafa Suleyman and starting to build their own large language models, which I expect will compete with OpenAI very aggressively. And I think it's the end of the this is the end of the OpenAI.
A real
Microsoft
break in the alliance that was first forged and almost put OpenAI on the map when Microsoft made a big investment.
You really saw it here last year, even before Microsoft hired Mustafa Suleyman, who's an incredible computer scientist, as you know, is the lineage of Google, Inflection, now Microsoft. Sam and Mustafa were not getting along well on panels that they were on here at Davos. You can go back and see that. I remember one specific panel that I was in, and it was thought they were going to come to blows, but you know it didn't happen.
And so, has Larry Ellison and Oracle, you think, stepped in as a technology partner or a source of funding for OpenAI?
I can't speak to those specifics, but what I can tell you is that I think it's a big moment in the history of OpenAI that they're not running on a Microsoft data center.
And how does it impact, I guess, Microsoft's competitiveness on AI going forward? We'll talk about Copilot and the like, but do you feel like, you know, because of these developments, Satya and Microsoft are in an unfavorable strategic position?
Well, I think, as you know, Microsoft doesn't have today their own frontier model. So they rely on OpenAI, and now OpenAI is saying that they're going to another data center structure. So it's a big moment.
Right, and to just close the loop on Stargate, part of this is obviously driven by national security concerns and the idea that, that it is vitally important for the U.S. to maintain this lead. I mean, do you share the concern and the urgency? And do you think China is close to AI parity?
Well, you have, 6 questions in there? Let's kind of peel it apart one by one. I think that we're just seeing a incredible amount of investment in AI overall, which is because it's really exciting. Look at what's happening here at the conference I just showed you. You know that Salesforce has run the information management for the World Economic Forum for more than a decade. So everything that's happening here is running on Salesforce, and we've used our Einstein platform here for years. But this is the year that we're using Agentforce. So now you have an agent that's front-end in your app.
You should probably define what that is.
Okay, well, what it is you have the ability now to use an agent, a kind of almost like a digital worker, to help you to kind of get your job done. So here I am, I have my app, I'm on my phone, I'm normally just bringing up my World Economic Forum app, I'm going through trying to find all my sessions, when is Brad speaking, how do I know Brad, can I contact Brad? Instead, now I can just say to the agent, hey, when is Brad speaking, and will you contact him for me and help me make this happen? At Salesforce, we just deployed our Agentforce technology on help.salesforce.com, which is how we deliver help to our customers. 36,000 customers a week come to help.salesforce.com. If you had come there a month or so ago, about 10,000 of those customers have to move off and get support from human beings, and about 26,000 got resolved by our software. Now with Agentforce, only 5,000 are going off to human beings. So our 9,000 support agents have a little bit less to do because the software is able to resolve a lot of this on its own. And that's a very exciting moment that AI and agents can kind of give us this incredible productivity that we couldn't have, whether we're trying to navigate the World Economic Forum in Davos or where Mark Benioff is trying to answer his customers' support issues. Agents are making a huge difference in our ability to be successful.
I want to come back to that, but I just want to make sure we answered the previous question on kind of AI parity between China and the U.S.
I don't think there is AI parity today. Okay. No, I think that the U.S. has a definitive lead, and I think most of the analysis. And I think obviously you have a big shootout going on at the very top end of the frontier models between Google, OpenAI, and Anthropic. Salesforce is obviously an investor in Anthropic. We obviously have relationships with OpenAI and also Google. The Google technology, I think, is amazing. Neil Ferguson just wrote a tremendous analysis of the 3 models and kind of said it appears that Google.
So Gemini is a player now.
I think Gemini is more than a player. It's probably ahead.
Mm-hmm. Okay, and by the way, Dario preceded you on stage earlier this afternoon.
He has an outstanding model and is doing a great job in his company.
Okay, so back to Agentforce. You said less things for your employees to do with Agentforce, but does it also mean fewer employees? What are the ramifications of this kind of new age of agentic models going to unsupervised, do our tasks for us?
No question. I mean, of course, in the history, look, technology is always getting lower cost and easier to use. There's not any, horses out on the streets right now going up, and now we have cars now. And in the same way, I think we should just think about the analogy I just gave you, which is that we have a lot less work for our support agents to do because we've deployed Agentforce at Salesforce. So I can redeploy that resource into other parts of the company. That's very exciting for me. I have plenty to do, so I can kind of say, okay, these folks can work on this now instead of being over here.
Has it changed the arc of your hiring plans going forward? And what does the widespread deployment of this technology mean for, a full employment labor market?
Well, that is really the powerful thing. We're in a labor market where it's really hard to hire people. There aren't people to hire. I want to radically expand sales and service and marketing at Salesforce because we are seeing a huge amount of demand in moving and deploying our new technologies. Finding those people incredibly difficult. That I have agents at my disposal is tremendous. So look, I want an unlimited workforce. I think everybody does. Agentforce, AI agents, that's beginning of an unlimited workforce. I'll give you an example. We have a customer called Wiley. They're a bookseller in the U.S. You probably have picked up some of their books when you were in college.
We know them well, yes.
You know them well. And, you know, they have this moment every year called back to school, and they have to normally hire a lot of gig workers to go into sales or into service or whatever it is. This is the year they did not have to do it. We're one of our launch customers on Agentforce. They have the ability to just scale their sales and service when they needed it and then bring it back down when that demand spike ended. And we have now, you know, lots of examples of that. So we've now released the code late October. We did about 200 deals in our third quarter. In our fourth quarter, we'll see thousands of Agentforce deals, and I've never seen anything go as fast at Salesforce as this. I've never been as excited about the technology industry as I am right now.
So in the tech industry, we love a good old-fashioned feud. We used to have a lot of them, like Larry and Bill sparring. You know, Kendrick Lamar and Drake had nothing on the tech industry. But recently, you know, you've been tweeting or posting on X as you describe Agentforce and drawing juxtapositions with Microsoft and Copilot. Not to do more Microsoft bashing here, but I think you compared it to Clippy. Yeah, no, but I want you to, because I don't know that I really fully got my brain around it, how the Agentforce model is different than the Copilot model.
I can make it very simple.
Yeah, what are the two?
Well, first of all, you're right. Microsoft has disappointed, you know, a lot of customers with Copilot, and the reason why is
I'm not sure everybody agrees, but okay.
Well, I mean, you can read the Gartner analysis, you can read a lot of the media, but I'm sure you're a big Copilot user yourself. Is that right?
I try to moderate my use.
Oh, I see. So you don't use it.
I don't want
all right, but you're like most people. You don't use it.
For me.
All right, thank you. Thank you for making my case. But anyway, the point of it is all Copilot is repackaged ChatGPT. So in a chart I just saw of like the 20 most used apps currently on the internet, like OpenAI was very much at the top. Copilot was not on the list. I just retweeted it actually. So when you look at that, why that is because why use it? It's not really offering me any value. So Agentforce is really what AI was meant to be, the ability to give a company, a user, a customer, really the value of artificial intelligence. That's why I was excited to bring it to the show, excited that Davos has deployed it, and we can really show customers here that this is a really great opportunity. And an example, yesterday we were in a session with Royal Bank of Canada, who just deployed it for their wealth management. Look, their ability to scale and compete against the big U.S. banks when their wealth management is augmented because they're using Agentforce. That's very exciting for them. Their CEO, Dave McKay, is here. It was really a great moment to hear, you know, what they're doing with this.
So before you mentioned the abundant capital flowing into AI, you know, Anthropic, to even today, there was news of another $1 billion from Google. Is there any case to be made that AI is over-invested at this point?
No, there's not. I would say that we are really at a point where everything is changing. I think the evidence, like we just did a demo with your associate in the back here, where I just took out my phone and we were demoing the world.